Welcome to Friday Takeaway. On the menu, we've got Astro and Bumi Armada, but first we look at how, after billions of dollars spent and years of fighting tooth and nail for market share, Uber has sold its Southeast Asian business to Anthony Tan's Grab in a share swap deal where it will receive a 27.5% share, finally preparing Uber for an IPO in 2019. There may be a glut of malls in Malaysia, but there are still 800 million Chinese tourists travelling abroad over the next 5 years, and Malaysia must do its best to attract them, so says Ayah Hitam MP, Datuk Sri Dr. Wee Ka Siong. He said Chinese tourists favour Thailand over Malaysia, but we are still preferred over Vietnam. Malaysia's redelineation report was passed this week to massive protest after an embargo on the report was not only lifted just before it was debated, but also debated on the same day, a development that was described by opposition lawmakers as extraordinary. On to the FBM KLCI. As at 10 o'clock this morning, the index was up 0.1% to 1,857 points, just 8 points lower than last Friday. Year to date though, the KLCI is up 3.4%. In this week's This or That, it's all about Ananda Krishnan's listed vehicles. On one side is the media behemoth Astro, who despite commanding 3/4 of all TV eyeballs in the country, has seen its share price falling to record lows. On the other side, Bumi Armada, who has been reasonably resilient thanks to a slew of contract wins. Let's dig deeper. Now, thanks to their pay TV and free-to-air Enjoy platforms, Astro have a 75% stranglehold of all TV eyeballs in Malaysia, while their Go Shop home shopping division chips in with some non-media revenue. Now, they've remained resilient even with the global media landscape suffering a cord-cutting frenzy, with a still growing household penetration rate of 75%, while a 12% recovery in the ringgit translates into cheaper content costs and stronger consumer sentiment, which may then in turn help propel business for Go Shop. Now, on a one-year return basis, they're down 23% and their stock is at a record low, but today they are up 1 cent or half a percentage point to 205. Well, it's not good. TV revenue posted the 5th straight quarter of year-on-year declines in their latest earnings announcement, with subscribers dropping their plans or leaving the service. EBITDA, it's at a 4-year low. Now, CGS CIMB have stuck their necks out, saying that with Astro so low, it's time to buy. They've upgraded Astro to an add, albeit at a lower target price of RM2.70, with a potential pickup in consumer sentiment and a higher dividend payout as potential re-rating catalysts. Now, Bumi Armada are oil and gas service providers to offshore energy players here and overseas, owning and operating offshore support vessels for exploration, development and production activities. Armada's two outstanding projects, the FPSO Olombendo and FPSO Kraken, are on track to achieve their final acceptances by the second quarter, while the other two projects, Armada TGT-1 and the idled Armada Clare, are expected to see their charters extended and redeployed respectively. Armada are doing better than Astro, high by nearly 13% over a 12-month period, and today up another 1 cent or 1.2% to 84 cents. Now, there's always the risk of worse than expected utilization rates and unexpected further asset impairments, not to mention poor performance and delivery of the FPSOs, otherwise known as floating production, storage and offloading vessels that Armada services. UOB Kay Hian have maintained their buy call on Armada with a target price of RM1.06.